Why are so many banks collapsing? This is the hottest topic about the US dollar. What's going on? How is it going to be handled? And why? I have brought with me today, we are going to do a variety of videos with this amazing man. I think he's a world-leading economist, smartest man I know in money, and he has actually designed the software of iFlip, which is an AI-driven software, takes you in and out of the market. So while you guys park with financial planners and pray you're gonna make money and lose 30 and 40 and 50%, think that's okay, I've lost less than 3%. So let me introduce you to Kelly Korshak. So the three things we're going to talk about why the banks are collapsing is number one, it's the risky business practices of the bank. We're going to talk about the economic instability. And number three, we're going to talk about the regulatory failures. So with me today, Kelly Korshak is with me, smartest man I know. I brag about him all the time. And no other person I want to talk about this. And welcome, Kelly.
Hello, Laurel. How are you today?
I'm good. And Kelly is the really the architect of iFlip. So in the description show notes below, you can grab a free copy of the software app. And as you grow into it, you'll want a bigger software. And it is a awesome place to put your money. And we'll talk a little bit about that. But Kelly, let's talk about the banks. Why are they collapsing? So risky business practices, talk a little bit about that.
Well, the risky business practices in regards to the banking system is bifurcated. We have to look at it in two ways. The first way is that banks are divided between regional banks and money center banks. The money center banks right now do not have the issues. In other words, Citibank, Bank of America, Chase, Wells Fargo, large money center banks are not right now having a problem. However, much of the lending in this country is done by regional banks. Generally, most loans, 60% of all home loans are coming from a regional bank. And 80% of all small business loans are also coming from regional banks. So we must have regional banks because that's how the money is distributed through the economy is done by these smaller banks. Here's the problem. The smaller banks don't attract the top line talent to be able to manage the risk inside their bank. What has happened is that interest rates have gone up. We all know that. And that means when a bank must have securities to be able to back up the amount of lending they do, they buy government securities. The government securities have gone down in price. That means they no longer have the collateral, the capitalization to offer loans. So going forward, the risk came from the interest rates going up, and now the banks don't have the reserve requirements to be able to meet the the deposits for the bank. And that means they can't lend as much. And they have come into problems because without the Fed's help, they no longer are able to lend almost to all banks, not just Silicon Valley Bank or First Fidelity in San Francisco. Generally, all regional banks suffer the same problem. They didn't hedge their risk. So folks, if you have money in these regional banks, which most of us do, recognize that your deposits are going to be guaranteed up to $250,000. However, this banking crisis is not over. There is a lot of problems yet to come. And the problems may not be that the banks implode. It'll be that they no longer can lend. And if they can't lend, that means that causes a problem economically and wider spread than just the fact that of a few banks failing.
So then talk about that economic instability and where that's going to lead.
And in general, the world revolves around credit, not the equity markets. It's around credit. If loans can be gotten easily, it generally signals an expanding economy. Right now, our economy is bifurcated. If you're a large company and you need a loan, like an Apple, who doesn't need it, but companies similar to that, they go to a money center bank. Those are the best credited companies in the country. They can go to Chase and get a loan. However, if you're a smaller business, and most of us are in smaller businesses, and generally 60% of the economy is driven by these smaller business loans and that therefore regional banks. That means if the implosion that could occur is if the lending dries up from these regional banks, that will stifle the economy. That will cause GDP to contract. And if GDP contracts, that should cause a lot of unemployment going forward. And that's, by the way, the expectations of most people. that this country will enter some kind of a recession if it's not already in one. We've heard that. But what will really happen is you'll start to see some of the smaller jobs and smaller companies lay off people. And of course, if that happens, there's demand destruction, and generally all prices will go down, very deflationary, but at the cost of our economy slowing down greatly. So that is the dilemma of the day.
And then the regulatory failures. I mean, even like bringing a little bit what happened to Silicon Valley Bank too.
Silicon Valley Bank was very similar to all the 2 or 3 other banks, Signature Bank in New York, and was it First Fidelity in San Francisco. Poor risk management. Regional banks, as I stated before, don't attract the top line talent that is able to understand how to hedge the risk of the assets that the bank owns. The hedging of it is actually very easy, but the reason they failed and have failures and cause the Fed to ultimately, and the Treasury, to bail them out is because they don't know how to manage their risk. Generally, I can tell you that when I worked on Wall Street, I would consider myself one of the better risk managers. There was some, I think, superior to myself, but one thing we all had in common, at a very base level, we knew how to hedge rates. When you know you got to have something, but you don't want the price to go down, it's an easy hedge. And none of the people at these banks knew how to even do that. Why? Because the people that did know how would go get a much higher paying job at a money center bank. So they just can't attract the talent. That's why these things fail, just not ability to attract talent. And by the way, it reminds me of the savings and loan problems that we had during the 80s. Same exact thing, just couldn't get the talent to manage the assets of the bank or SNL.
Amazing, amazing, amazing. Those of you that are finding this interesting, we are in the middle of a series talking about banking with Kelly. Kelly, before we leave, say a few words about iFlip, why they need to go get this software, and what it's going to do to really, I'd say, insulate them and protect them from this crazy economy and the market volatility.
The advantage of iFlip is pretty straightforward. Most of us have investment accounts. We have retirement accounts, we have Roths, we have 401ks, and we have our individual accounts. When people don't know what to do with their money, they put it into an account. They put it at Schwab or TD. And what do? At Schwab or TD, they will be given maybe an advisor, and they will tell you how to invest your money. Most people don't know that they could just go buy, for example, the Standard & Poor's 500 SPDR. They need someone to show them. What Flip does very simply is we make it super easy. You really don't need to learn or know anything. You just have to know, what are you trying to accomplish? Are you interested in making money in the stock market and you don't care and you have a high risk tolerance? You can click a button and you can own everything that would represent a high risk tolerance portfolio of stocks. And those things include things like Tesla. And they include things like Microsoft or Apple or Gilead or United Health or ExxonMobil. And the summation of those things represent very good companies. And the iFlip does not look to go outside of its box. It just tries to buy the Standard & Poor's 500 companies. And it does so using artificial intelligence or machine learning technology to be able to accomplish what are the best things to own. And then once you own them, how do you manage the ownership? Do you own them all the time, or do you do that some of the time and have cash some of the time to be able to manage your risk? That's where iFlip comes in. It handles both of those things. If you don't know what to choose, you can choose something. It's easy, and it manages the risk once you click it. Very simple.
Absolutely. So those of you, go grab a free copy of the iFlip app in the description below. Also, again, once you're subscribing to this channel, click that notification button. Want you here 5 days a week with you and your family. We have a YouTube journal coming out quickly. And any questions that you ever have, go to askloral.com, ASKLORAL, and we will be right back with you. We have somebody on those accounts and all your questions 24/7. Talk to you tomorrow.